Good afternoon. Welcome to my class. Today we'll be doing a special inclusion. If you have any question, you want to discuss something, you can stop me. We can discuss further. And thank you for joining us. And sorry about yesterday. So the learning outcome of today, we need to calculate the natural person gross income. This one we'll do at the end, and determine why types of income do not meet the requirement of general definition of gross income. Remember, we did the gross income, and there were certain income that were included in the gross income as they meet definition of the gross income. But now we'll talk about certain types of income that do not meet this requirement. We call them the special inclusion. So we will determine which amount fall into the receiving in respect of services rendered and holding of a service. We'll discuss more about the services rendered and the employment and holding of service, and we'll list the receipt of accrual that is specifically included in the gross income. So the last one will demonstrate your ability to discuss whether a receipt and accrual should be specially included in the gross income, even if it doesn't meet the requirement not of capital nature. So today we'll be talking about the special inclusion. What is those things they don't meet the requirement of gross income, but they are specially included in the gross income definition. So under the background, we have special exclusion extended to the definition of gross income to specific amount, although an amount may be excluded from the definition. As I said, we did talk about the gross income and the income that are included, that are revenue nature, that are form part of gross income, even though those amounts were excluded from the definition of gross income as a result of meeting any requirement. The specific inclusion contained in paragraph A to N of the gross income definition have the effect that amount covered by the provision of this paragraph are included in the gross income of the taxpayer. So we'll be talking about the specific inclusion in terms of paragraph A to N. So for example, if a person sells a business, the proceeds from such sales are likely to be regarded as capital receipt and consequently to be excluded in the gross income. So this is the background of the special inclusion. So any question? I think someone is wanted to talk.
Yeah, I hear there's a sound. I'm trying to mute. Kindly mute if you don't talk. There's no hand. There's no hand, Maite.
Okay, I thought maybe they wanted to discuss more. So we are still on the background. So however, if the purchase consideration is received by the seller in the form of a regular monthly payment instead of a lump sum, the application of paragraph A of the definition of gross income, which specifically include annuities in the gross income, may result in this receipt, although it's of capital nature, but they will specifically be included in the gross income of the taxpayer. So we'll discuss that in details. So in terms of Income Tax Act, definition of income tax, we have the following. We have the following special inclusion, which is the annuities in terms of paragraph A, alimony in terms of paragraph B, services rendered in terms of paragraph C, so restraint of trade instead of paragraph C cap A and paragraph C cap B, and loss of office in terms of paragraph D, and fund benefit in terms of paragraph E and paragraph E cap A, and service of the commutation of amount due in terms of paragraph F, the lease premium in terms of paragraph G, know-how payment in terms of paragraph G, capital A, the lease improvement in terms of paragraph H, the fringe benefit in terms of paragraph I, dividends in terms of paragraph K, human policies, paragraph M, and other income in terms of paragraph N. So we'll discuss all these are especially included in the definition of gross income. So we'll discuss each special inclusion in detail. So the first one, we have the annuity and periodic payment. So the annuities will be paid in terms of the pension fund is received regular or periodic payment is the annuity that we're talking about. The periodic payment, which includes the monthly receipt from any type of a pension, provident, reservation, or retirement annuity fund. These payments are specially included in the gross income in terms of paragraph A of the gross income definition. So paragraph A of gross income specially includes the monthly receipt from any type of pension, provident, preservation, or retirement annuity fund. So this amount must be distinguished from the retirement lump sum benefit. So the retirement lump sum benefit must be distinguished from this amount, this payment. So non-resident of South Africa will be taxed. Remember this, non-resident of South Africa will be taxed on pension paid to them from South Africa, as well as certain pension that are deemed to be from a South African source. Remember, the non-resident is taxed on the worldwide receipts. No, sorry. The non-resident will be taxed on the pension paid to them from South Africa, as well as certain pension that are deemed to be from South Africa. So non-resident are taxed on the source based. So this person, if, for example, if it's the non-resident, he will be taxed on the pension paid to them in South Africa. So he'll be taxed on the source. The source is South Africa, so he'll be taxed on the source. So these annuities, as I explained, they will be especially included in the gross income in terms of paragraph A of the Income Tax Act. So we are still on the annuities and periodic payment. So in some cases, it might be necessary to apportion the pension between the period for which the person was employed in South Africa and the period where he or she was employed outside South Africa. Remember, from the previous slide, we said the non-South African are taxed on source-based. So this sentence means that if you have pension from South Africa and you also have pension period that you were employed in, the taxpayer was employed outside South Africa, they will apportion the pension between the period which the person was employed in South Africa and she was employed outside South Africa. So any types of annuity is also especially included in terms of paragraph A. So it's also important to be aware that annuities income does not only originate from the retirement annuity fund. Remember on the previous slide, I talked about the types of the annuities. The types of the annuities which are included, which include the pension, the provident, preservation, or retirement annuity. That's why we are saying the annuities are not only originate from retirement fund. For example, annuity income will be received from insurance policies. We have those one from the previous slide, and we have also annuities from insurance policies. Annuities from Metropolitan, for example, for those ones from the employer, insurance policies from the employer and from the purchase of a business. So we have other type of annuity except from the pension fund. So a receipt that is regarded as paying capital in nature is not normally subject to tax. Remember, everything that is of capital in nature is not subject to tax, is not taxed. It doesn't meet the requirement of gross income. So such as inheritance will be specially included in the gross income if it's payable in the form of annuity. So you can also refer to this case of Allen versus Hogan 55 of 329. You can also refer to that for more explanation.
Please mute. Yeah.
I thought it was a hand.
No, I've muted. Sorry, Maite.
Okay. We're still talking about the annuities and periodic payments that are specially included in the gross income. So they are also taxed. So a receipt that is regarded as spending capital in nature. I said, remember on the capital in nature, everything that is in capital is being in capital in nature is not normally subject to tax. You are not taxed on that. For example, inheritance, which will be specially included in the gross income if it's payable in the form of annuity. So inheritance will be, if it was paid in the form of annuity, it will form part of gross income. So I said you can also check the case of Hogan versus SATC of 329. So a taxpayer can invest an amount with the insurance company and thereby purchase an annuity. This is the form of another of annuity other than the pension. So a taxpayer will then receive a monthly annuity payment from the insurance company. This type of annuity is called purchase annuity, where a taxpayer for example, go to insurance company like Momentum, then the taxpayer will purchase an annuity, and after the taxpayer retire, he will receive the monthly annuity payment from Momentum, and this type of annuity is being called the purchased annuity. So that is the example of purchase annuity. When you go maybe to Metropolitan, you buy annuity, and when you retire, they pay you this annuity monthly. The other one, the annuity received by a taxpayer are composed of two elements. We have two elements of annuity, which is the partial repayment of original capital investment, which is non-taxable. The partial annuity is non-taxable, is what we call a original capital investment. The other one is the investment return. The non-taxable portion is calculated in terms of a formula. This one you can check on your book how they calculate the investment return, however is not taxable. Only the portion of which is calculated in terms of a formula. So that amount is then deducted from the total return received during the year of assessment in order to determine the taxable portion of the purchased annuity. So we are still talking about those purchased annuity, which I gave example. I said those purchased annuity, for example, you can go to Old Mutual and buy annuity, and then when you retire, they will pay that annuity monthly. So here we were just talking about the annuity received by the taxpayer. So when you retire, you will receive annuity. It will be in terms of the partial repayment, which is not taxable, which is non-taxable, and the investment return, we only tax the portion, and then you can deduct from the total return received during the year of assessment. So we're still on the annuity, which is especially included in the gross income. So annuity in terms of paragraph A of the income tax in section 1 of the income tax. So in terms of paragraph A, any amount received or accrued by the way of annuity include any amount completed in the definition of a living annuity or the definition of annuity in terms of section 10 cap A1 will be the annual payment, the repetitive, and the chargeable against a person. So what is included is the installment payment, is not included in the definition of annuities. And discretion payment and terminable amount. So for example of what I was talking when I say the installment is excluded. Let's do the following example. Mantra sold a fast food takeaway business for 120 during the 2023 year of assessment. So seeing that the buyer could not pay the full purchase price in cash, Mantra agreed to receive. Mantra agreed with the taxpayer that with the buyer that he will pay, the buyer will pay 1.2 per year for 10 years to bring it to 120 as a settlement amount owned by her. Will this installment amount that Manto agreed to receive, will it be included in Manto's gross income? Because we said it's not included because it's an installment. Remember, this person, the buyer, told Manto that he will pay Mantua 12,000 per year, which is a yearly installment. So we wanted to know if it's included, especially is included in the gross income of Mantua, because what we said in the previous slide, we said if the amount that is excluded is the installment payment, it will not be included in Mantua's gross income. So we talked about annuities that were the previous slide. We said we have this specially inclusion, the specially inclusion income in terms of the gross income. We covered the annuity. I said the annuity, I gave you the definition of annuity. What is that? What is included in the annuity? What is excluded in the annuity in terms of the paragraph A? And also we did example where the person was paying in installment. We said installment doesn't form part of annuity. So the other example is that Lungi agreed to sell the business with the manufacturer in Italian pasta sauce to Olive Money. In return, Olive Money paid a yearly amount of 100,000 for the rest of his life as a consideration for the business. So will the amount be included in the gross income? Yes, it will be included as an annuity. So is the other example. So we are done with the annuity to move to the alimony allowance or maintenance in terms of paragraph B of the income tax of section 1 of the income tax. So alimony payment in terms of paragraph B is defined as follows: is any amount payable to the taxpayer by a spouse or former spouse for that taxpayer. Is there, in terms of paragraph B of section 1 of the income tax, any amount payable to the taxpayer by alimony is defined as any amount payable to the taxpayer by a spouse or former spouse of that taxpayer under any judicial order or written agreement of separation or under any order of divorce by the way of alimony or allowance or maintenance to the taxpayer. So in terms of section 1, paragraph B, what it means is that the taxpayer, the spouse or former spouse of the taxpayer under court order or under agreement, under court order agreement whether it's a divorce, under divorce or separation, that amount or any allowance of maintenance, that amount will be called alimony when the taxpayer receives the money from a spouse or when the taxpayer receives allowance or maintenance from the spouse. So in terms of maintenance order for the maintenance of the child is complemented in section 15. This is the other definition of alimony, is maintenance order for the child in terms of section 51 of the Maintenance Act. So alimony is the divorce or separation amount that is received by the taxpayer or the amount of the maintenance order amount for the child. So the receiving spouse include in the gross income, the receiving spouse. So we have two people, is the receiving spouse and the paying spouse. So the paying spouse, there is no deduction. The receiving spouse receive money in terms of gross income, it will be included in the gross income. In terms of section 1 of the Income Tax Act, paragraph B, the alimony payment will be regarded as alimony in terms of this paragraph B, and the amount which is received by the spouse will be included in the gross income. And remember, we have a receiving spouse and the paying spouse. The paying spouse will receive no deduction for the amount that he is paying to the receiving spouse. He will receive no deduction. The amount, though, is included in the gross income, it doesn't qualify for deduction in terms of section 11. So however, exempt under the receiving spouse will receive in terms of gross income, will include the amount in terms of gross income. However, under section 10(1)(u), the exemption that apply to them are covered in there is an exemption in terms of section 10(1)(u). So the exemption will be covered in next week in the learning unit 4. So in this situation, we have alimony. We have the definition of the alimony. What is then alimony in terms of section 1, paragraph B of the income tax. So we have a situation where we have a receiving spouse and a paying spouse. A receiving spouse will include the amount in the gross income, and the paying spouse will not receive any deduction for the money he is paying to the receiving spouse. But in terms of section 10(1)(u) of the income tax, the receiving spouse will be exempted. So, but we'll deal with that later in learning unit 4. So we are done with the alimony. We are moving to the amount received in respect of services rendered in terms of paragraph C. So the definition of services rendered in terms of paragraph C is any amount, including any voluntary award, received or accrued in respect of services rendered, to be rendered, or amount in bracket other than any amount referred to in section 8(1), received or accrued in respect of employment or holding any office. So in terms of this paragraph, in terms of paragraph C, the definition of services, again, is then any amount, including voluntary reward, received or accrued in respect of services rendered or to be rendered, other than any amount referred in section 8(1), received or accrued in respect of any employment or holding any office. This is the definition of services rendered in terms of section 1 of the income tax, paragraph C. So provided that the provision of this paragraph shall not apply in respect of any benefit or advance in respect of which the provision of paragraph I apply. So provided again that any amount received or accrued to for the benefit of any person in respect of services rendered or to be rendered by other person shall for the purpose of this definition be deemed to have been received to or accrued to the said person. So we'll do example of this one where the service is rendered but the amount is accrued to other person. So the example of paragraph C. This is example of paragraph C. We said paragraph C is the amount, in terms of paragraph C, services rendered is defined as any amount including voluntary award or received or accrued of services of services rendered or to be rendered by any or any amount referred to section 81 received or accrued in respect of any employment or holding, provided that any amount received or accrued to the benefit of a person in respect of services rendered to be rendered by a person shall for the purpose of definition be deemed. So let's do the example of service where the service is rendered, but it was for the benefit of other person. So for example, Jill pays 10,000 to John in respect of services that were actually rendered by John. Remember, Jill is paying for the service to John, but the service was rendered by Jack, is John's father. So Jill pay John, is Jill, John, and the father. So Jill pays 10,000 to John in respect of service that were actually rendered by Jack, John's father. So the 1,000, the 1,000 must be especially included in Jack's, not John's gross income. Remember, we have three people. We have John, Jill, Jack, and John. So Jill is paying John, but the services was rendered by Jack. Jack was rendering service to Jill, but the service were actually rendered by Jack, John's father. So the 10,000 must be especially included in Jack, not John's gross income. It was, remember, it was Jack that caused the payment. Therefore, it must be included in his gross income. So we are done with services rendered. We'll go to the other one, the special inclusion in the gross income.
I wanted to understand what's the meaning of holding of an office.
Holding of an office is,
yes.
Okay, where did I talk about holding an office?
On your definitions, it says
in terms of section 1. In terms of section 1 of the income tax, where I said the amount received. In terms of paragraph C, I said the amount include voluntarily received or accrued in respect of services rendered or employment, or in respect of services rendered, received or accrued in respect of any employment. Holding an office is like employment. We just call it holding an office, but it's an employment where you are rendering a service. So we have another restraint of trade. We have another special inclusion, which is in terms of section C cap A and C cap B. So restraint of trade is defined as restraint to use talent, knowledge, skill, or business contract for a certain period. So maybe you are, for example, where you sign that when you leave certain company, You won't trade using you won't do the same work you did from the previous company, but they pay you for that amount. So amount will be received by a personal service provider or company, paragraph C, cap A, labor broker, company, paragraph C, A, and natural person, paragraph C, B of the income tax. So in terms of paragraph C, I think it's cap A here. Yeah, it's cap. So in terms of this paragraph C cap A and C cap B, the receipt of the accrual of restraint of trade payment by a company to a natural person is included in the gross income. So you work for a certain company and they pay you for not using the same, for not using the same, for not working the same work as you work for the previous company. So the amount that the company will be prepaying you for restraint of a trade, the receipt of accrual will be included in the gross income, will be specially included in the gross income. So amount, restraint of a trade, we are done. We know that if the company pay you for the restraint of trade payment, it will be included in the gross income. So the next one is the amount received for termination of employment in terms of paragraph D of the income tax. So amounts include the severance pay benefit, lump sum from the employer for termination of employment, lump sum from employer for loss of service, person receiving benefit who is older than 55 or permanently incapable or retrenched. The employer retrench employment is person becomes redundant. The person does not, the other one is the person who doesn't hold more than 5% of the employment shares. So here is the amount that we received from the employment for lump sum from the employer, where the employer give you lump sum for loss of office or person receive benefit, permanently incapable or retrenchment. So this amount will be reserved by the employee. So will be included in the gross income in terms of section 1, paragraph D. So we are still continuing about the amount received from termination of employment in terms of section D. So lump sum in terms of section of paragraph D, the lump sum received from employers are included in terms of paragraph D, will be included in the gross income. The lump sum that you receive from employer, that the taxpayer receives from employer. Retirement lump sum benefit or retirement lump sum withdrawal benefit in terms of section E and section E cap A will be the taxable portion of the retirement fund lump sum are included in the gross income. So the taxable portion of this retirement fund lump sum will be included in the gross income. The calculation is done in terms of second schedule. So Learning 12, we'll deal with how the taxable portion of this lump sum are calculated and taxed. So for now, for today's lecture, you just need to know that lump sum from the employer will be included and the taxable portion of the lump sum will be included in the gross income. The other one is commutation of amounts due in terms of paragraph F. So any amount received or accrued in commutation is substitution of amount under any contract of employment of service will be included in the gross income in terms of paragraph F. So the next one is the lease premium in terms of paragraph G of the income tax. So the lease income is payment of right of use of asset. So it will be in a determined monetary value, normally a lump sum payment at inception of the lease. The lease premium in terms of paragraph G, it will be the payment of right of use of asset, determinable monetary value, normally a lump sum payment at inception of the lease. 100% will be included in the year received. The lease premium will be included in the year it received, year of assessment. So payment in additional to any place of rental of payment. So this will be the lease premium. So although this lease premium payment may be of capital nature in the hand of the lessor, we have the lessor, we have the lessee. So in the hand of the lessor, it will be the payment where where the lessee pay the lease premium may be of capital nature in the hand of AC, but is included in the gross income. Remember, we have the lessee, we have the lessor. The lessor will rent the house to the lessee, and the lessor will receive the lease premium. So this amount of the lease premium will be included in the gross income. But when it's of capital nature, but it will be included in the gross income of the lessor. So we have another one in another the special inclusion, which is know-how payment in terms of paragraph G cap A. So amount received or accrued from other person in respect of imparting scientific, technical, or industrial or commercial knowledge are included in the gross income. Those technical and industrial knowledge, those scientific knowledge will also be included in the gross income. Let's go for the other one is in terms of paragraph H of the lessee improvement, the leasehold improvement. We'll have the situation where is the lessee. Remember, previous slide we were talking about the lessee and the lessor. So the amount that is being the lease premium that is paid by the lessee to the lessor must include the amount in the gross income. Although it's of capital nature, but it must be included in terms of special inclusion. It must be included in the gross income. Now we have a situation under paragraph H where the leasehold, where we have a lessee improving the house or the building that he is leasing. So the lease agreement will contain obligation to affect that improvement. So between the lessee and the lessor, they will sign a lease agreement. So the lease agreement will contain obligation to affect the improvement. So before the lessee can do improvement on behalf of the lessor, before the leasehold improvement can be done, there must be an agreement between the lessor and the lessee, and the amount of the leasehold improvement must be included in the lessor gross income. So amount and value must be stipulated in the lease agreement. So if the amount is not stipulated in the lease agreement, it will be determined fairly and reasonably value of the improvement. Before there can be any improvement, there must be an agreement, and the agreement must be, there must be amount value as per the lease agreement. And if there is no amount, if you didn't stipulate any amount, the fair value and reasonable value of the improvement will be used to determine the value of the improvement. So we'll have we're still under paragraph H. We'll have the situation where there is improvement, but which are greater than amount stipulated in the paragraph. In this situation, the lessee voluntarily spent more than specified amount. Remember, before any leasehold improvement, there must be an agreement, and the agreement must stipulate the amount. So in this situation, there was an improvement, but amount stipulated is great. The improvements are greater than the amount on the agreement, stipulated in the agreement between the lessor and the lessee. So the lessee voluntarily spent more than specified amount. The stipulated amount will be included in the gross income, not the amount, the amount more than stipulated in the paragraph, in the agreement. So the lease agreement requires specific type of building. So the reasonable value will be included if the lease agreement requires a specific type of building. If they require maybe a building, specified improvement on the building, so reasonable value will be included. So in which year the amount will be included in the gross income when the improvements are complete. And voluntary improvement will not be taxable. So as I mentioned from the paragraph, in terms of paragraph G, there must be an agreement between the lessor and the lessee. Before, there must be an agreement between the lessor and the lessee. So everything that has been, the improvement that will be done on the lease must be on the agreement before the lessee, the improvement can take place. So if there's no amount stipulated in the lease agreement, we'll do the fair value, we'll determine the price, the reasonable value for the improvement. So what is important in terms of paragraph G of the income tax? You must know that if the improvement are more than the money stipulated, the lease voluntarily spend more than the amount on the lease on the agreement, the stipulated amount will be included in the gross income. So the other situation is where the lease agreement requires specific type of building, reasonable value will be included in the gross income. So the other scenario is where in which we have three scenarios where the lessee spends more than, you must know that you include only stipulated amount. The other one we have where there is an improvement, the amount is stipulated in the paragraph, you include is greater than the amount which is stipulated in the paragraph. The lessee spent more than specified in the amount, only the amount on the agreement, the amount agreed upon must be included in the gross income. The other situation is where the lessee requires specific type, the reasonable value. And then in which year, we must know which year of assessment when the improvement is complete. The improvement needs to be completed before we can add the amount in the gross income. So the other situation is where there is a voluntary improvement, where the lessee voluntarily improve the building, will not be taxed. It's not on the contract, it will not be taxable. The other one, the amount that specifically included in the definition, in terms of the definition of gross income, in terms of paragraph I, is the proceed, is the French benefit. So the French benefit is the proceed from disposal of capital assets. The proceed from disposal of fixed capital assets are capital in nature, and the capital gain may form part of the taxable gain, must be included. The taxable capital gain must be included in the taxable income in terms of section 26 cap A of the income tax. So we have the amount, the proceed from disposal of a fixed asset. They are in capital in nature, so they will be taxed in the form of capital gain. And the capital gain may form part of taxable gain that is included in the taxable income in terms of Section 226 Cap A. So the proceed will be included in the gross income as in terms of paragraph I. So manufacture of assets can sometimes use some of the asset as fixed capital in the business. However, where the assets are similar for trading stock that is used for the purpose of manufacture, sale, exchange, the proceeds of sale of this asset are included in the gross income. So we have two scenarios where we have the fixed asset, which is in capital nature. We have the proceed. We sell the fixed asset, but we know that receipt of fixed asset is of capital nature in terms of Section 26 Cap A. So we have the proceed, but it will be included in the gross income in terms of Section 26A. The second scenario is where the assets of a similar trading stock are used for the purpose of the manufacture, the sale or exchange. The proceeds of the sale of this asset will also be in the gross income. So we also have dividends in terms of paragraph AK and specific income. So in terms of paragraph A, we must include all dividends, interest, income, both locally and foreign, in the taxpayer's gross income. So the dividends, the interest in terms of paragraph K, and other income from both and foreign in the taxpayer must be included in the taxpayer gross income. But there is an exemption in terms of the exemption for dividends, interest, and other income in terms of Section 101K and 10 Cap B. So we have another one, is the other amount included in the gross income. So in terms of paragraph L, M, and N of the income tax, we have other income which are included in the gross income. So in this section, for the purpose of this most important paragraph is paragraph L. So we have paragraph LM. The most important one is paragraph N. So paragraph N states that in terms of paragraph N, the amount, any amount which is in terms of any other provision of the Act is required to be included in the taxpayer's income, must be specifically included in the gross income. So we have other income that are included in the gross income, but for the purpose of this module, we just need to know paragraph N, which is the most important one. So in terms of the paragraph N, say that any amount which in terms of any other provision of the Act is required to be included in the taxpayer's income must be included in the gross income. So paragraph N cover a wide range of receipt and accrual, including recruitment, income, including recruitment, income from estate accruing to beneficiary, gain from foreign exchange transaction. So in this paragraph, we have this paragraph LMN, which talks about the other amount which are included in the gross income. But you just need to know paragraph N, which state that any amount which in terms of other provision of Act are required to be included in the taxpayer's income must be included in the gross income. So We have recruitment. Remember, when we sell asset, when we recruit the asset in accounting, and the other one is income from the estate to the beneficiary, gain from foreign exchange transaction are also included in terms of included in the gross income in terms of paragraph N. So we're still talking about the other income included in the gross income in terms of paragraph L, M, and N. So one amount that is included in gross income via paragraph N is particularly relevant to this module. So the paragraph N is only the one that you need to know about. So where the portion of income that is received or accrued by one spouse is deemed to accrue to other spouse, where there is a portion of income received or accrued to one spouse will be deemed, in terms of paragraph N, will be deemed to be accrued to other spouse. So this occur where the taxpayer is married in community of property. Remember, when the taxpayer is married in community of property, the amount that is received by one spouse will be deemed to be accrued to other spouse. So we tax 50-50. So for couple married in community of property, passive income and rental income are deemed to be received in equal share by both spouses. So the spouse will receive 50-50 in this situation. So we have, in terms of paragraph N, we'll have the amount which is due from one spouse, but it will be, for example, we have the interest. If the interest is 10,000, 5,000 will be deemed to be accrued to other spouse. The 50%, the portion, the 50% is why we are saying one amount that is included in the gross income will be included in other spouse gross income. So if you are married in community of property, the passive income and rental income will be deemed to be accrued, will be deemed to be received in equal share to the others by both spouses. So it will be 50-50, whether there is passive income or rental income. So you'll be taxed on 50%. So we're still talking about other amount included in the gross income. The passive income will include the dividends income and the interest income. It's also important to be aware that there is an interest exemption. It will also be covered in the next week in the exemption that is available to be individual, but it will not be half. Each spouse will be entitled to his or her full exemption.
Please elaborate more on fringe benefit.
Okay, in terms of paragraph I of the income tax, we have fringe benefit that are specially included in the gross income. So the fringe benefit will be the proceed from disposal of asset, which is capital asset that are capital in nature. And the proceed will be included in the taxable income. The other one is the trading stock. They use that for the purpose of manufacture. It will also be included in the gross income.
On fringe benefits, when you say the proceeds, do you mean the selling price? I always get confused with the proceeds, whether it's when.
Okay.
Yeah, I wanted to ask whether I include the amount where I took the cost and minus the proceeds, the difference there after the calculation, I include it on the gross, or the proceeds itself, the selling price.
The proceed itself. The proceed is when we say base cost minus cost, you get the proceed.
Oh,
base
okay.
Cost, base minus cost, you'll get the proceed.
Okay.
The proceed is like cost minus expense. The proceed is after you minus the cost.
Oh, okay. Thank you. Can you also please go back? There's a part where I did not understand because of internet or the service commutation of amounts due. This part.
Paragraph F
Yes.
is it will be any amount received or accrued. The commutation means substitution of amount due under any contract of employment is where you receive an amount or accrued to you, but in substitution of amount due under any employment contract, under contract of employment or services will be included in the paragraph F. So it means is the taxpayer receiving amount in substitution of amount due. Receive or accrued in substitution. Commutation means substitution of amount due. In contract of employment, that amount will be included in the gross income. So I don't have example of this, but it's just a substitution of the amount due. When you have contract of employment, but instead you receive a substitution of the amount due, that substitution will be included in the gross income.
Yes, I have a question about the purchase annuity. I've noticed in some cases the expectation of life is used, and in some cases it's not used. So I'm not sure when to use it and not when to use it.
Can you repeat that again?
When calculating the purchased annuity, right?
Purchased annuity, yes.
Yes, we use the Y is equals to A divided by B multiplied by C. So I've
Yes.
realized that the expectation of life, in some cases it's used, and then in some cases it's not used. So my question is, how can I tell if I should use it or not use it?
What was the question? The question, in the required part, did they say you need to check the expectancy life?
It says calculate the taxable
The
portion
on the calculation.
calculate the taxable portion of the total annuity.
Yes.
Yes.
So I think we'll do the calculation later, because today I'm not sure what was the required on the question. So let's do the exemption, and when we calculate the income tax in fully, I will go through that calculation.
Okay, thank you.
Okay. I think I will come with the calculation on the next lecture, because today it was just theory of introducing the special inclusion in terms of paragraph. I just wanted to know which are included and which income is included in the special inclusion in terms of income tax, and the paragraph that are linked to that, and the list of all the inclusion in the income tax. So I think on the next lecture we'll be doing the exemption. So I will find some practical question which we can go through, especially the calculation. But you also need to know what the act is saying. Like, for example, the annuity is in terms of paragraph 1, what is included in the taxable income. So the calculation will come late.
Afternoon, colleagues. Hi, mate. I was saying, I think I missed the part where you were explaining about paragraph M, the keyman policy. Can you please cover it again? Thanks.
Sorry, can you repeat that again?
I'm saying I missed the keyman part policy, paragraph M. Can you just maybe repeat it for me? Thanks.
Okay, I said for this purpose, the keyman policy will be in terms of paragraph L, M, and N. But for this module, you just need to know paragraph N. So the key main paragraph N is only talking about the amount, is only talking about the recruitment, the income from estate to the beneficiary, and the gain from foreign exchange transaction. The key main policy is not included in here. I know it's in terms of paragraph N, but for this module, it's not included.
The referencing on paragraph.
Yes.
Are these under the income tax?
Yes.
That would be referring to the Income Tax Act of 1962.
Yes.
Yeah, yes. I mean, I seem to be backing somewhere down the line. If you go down on other sections when they refer to sections, but particularly to be specific on income tax.
Yes.
Unless otherwise, okay.
Yes, for example, unless otherwise specified. Remember, I talked about the maintenance. It was not in terms of section of Income Tax Act. I was talking about maintenance somewhere, but yeah. Yes. But all these are in terms. If I will mention it if it's not in terms of income tax. Yeah, I remember about the alimony. I was talking about the alimony. So I said in terms, yeah, this slide, I specifically said in terms of maintenance order of a child, in terms of section 15 of the Maintenance Act. So if it's not in terms of income tax, I will specifically say.
All right. Yeah, because I mean, it gets confusing sometimes when we are reading estates, then need to be under the estate. Okay. Yeah, it's a matter of, I mean, going through all these acts and where they reside in principle.
No, I will specifically say if it's not in terms of the Income Tax Act.
Okay. No, thank you so much.
Okay.
Hi, thank you so much. I wanted to ask or get clarity. When you were talking about leasehold improvements, sorry, you spoke about different circumstances. I didn't quite get them all. So could you please repeat that part?
Okay, I'll do that.
Yeah, thank you.
So in this case, we have the lease agreement. First of all, in terms of paragraph H of the income tax, we have a lease agreement. In the lease agreement, it contains obligation to do the improvement. The lease agreement is between the lessor and the lessee. So in this agreement, if there's no amount stipulated in the lease agreement, we determine the lease at a fair value. So let's go to the improvement. So we have three scenarios. The first scenario is where the lessee voluntary, remember we have the agreement, previous slide, we have a lease agreement. In the lease agreement, we specify the lease improvement agreement, we specify the amount which the lessee will do the agreement, the improvement, the leasehold improvement. So the first scenario, we have the amount stipulated, but the lessee voluntarily spent more than amount specified in the contract, in the agreement. So in this situation, we only include the amount stipulated in the contract. So we will have the lessee and the lessor. We have agreement. Between the lessee and the lessor is the agreement. And the agreement is about the leasehold improvement. So we stipulated 10,000. Then the lessee spent 20,000. So only 10,000 will be included in the gross income. So we have the second scenario. The second scenario is where the lease agreement requires specific type of building. They require that the building must be in a certain way. So the reasonable value will be included in the gross income. So now the building, we have the building, but they require the building to have some special requirements, maybe special specification. So we'll determine the reasonable value to include in the gross income. So we said in which year is the amount included. So it will be in the year where the improvement are completed. So the third scenario, we have voluntary improvement where we don't have agreement. The lessee just improved the building. We didn't agree on anything. We don't have an agreement, so will not be taxable because there is no agreement. So in the question, you must determine whether there is an agreement. You must also check amount on the agreement. So the amount on the agreement will be included in the gross income, the amount stipulated in the agreement. But if there's specific thing that is needed on the building, we determine the reasonable fee. If there's no agreement, nothing is taxable.
But are you saying it's not a deduction from the lessee?
No. Remember on the first one, I said
yeah.
There's no deduction, yeah.
Oh, okay.
Yes, there's no deduction for the list. Yeah.
Can we go back to the restraint of trade?
Yes, on the restraint of trade.
Okay, let's have a look there. We haven't got any. So, I mean, on the restraint of trade, that would be based on a once-off pay. Will that be a once-off?
Yeah, it will also depend on the agreement between you and the company.
Or it can be a lump sum over a certain period of time.
Yes.
Or sort of what you call it, something like a retainer, which is paid over a certain period, let's say expires after 3 years or something like that.
Yes, it depends. Also, if they're saying they will pay you over, let's say 1 year, 6 months, or they'll pay you as long as you are still working, doing the same thing. So you must also check the year of assessment. If the year of, you must also match the year of assessment on that.
Oh,
when
yeah,
you
it says, yeah,
include
for a certain
gross
period.
income.
Okay.
Yeah.
I think you went over services, and I think my network was down. The Jill pays check scenario. Can we go over that again if it's not too much to ask?
So here we said the amount received is in terms of paragraph C. We said the amount received in respect of services rendered. So the services rendered in terms of section C, it will be any amount including voluntary award received or accrued in respect of services rendered. Where we are clear is just a service rendered, or where the person is holding office. Holding office means that the person is being employed in that company. So provided that we have section, we have the definition of service, and then provided that the provision of paragraph will not be applied in respect of benefit, in respect of which provision of the paragraph I. So provision of paragraph I is where is that example where I say it will apply where any amount is received or accrued to a benefit of a person in respect of services rendered or to be rendered by other person shall for the purpose of divination be deemed to be received by or to be accrued to the said other person. So the example is this one. Here we have Jill. Jill is the person they render service to. So Jill, he pays the 10,000 to John in respect of the service that were actually rendered by Jack. Jack is John's father. So the service were rendered by John, but the service were rendered by Jack, but he paid John. So the 10,000 will be included in Jack, not John's gross income. So you get me? Is Jack.
Oh, so the agreement was between Jill and Jack.
Yes, but the service were rendered by Jack. So Jill, Jack, it was Jill that pays Jack. The service were rendered by Jack,
Okay.
not John.
Okay. So that's why
Yeah.
Jack is going to include their this 10,000 rand in their gross income.
Yeah, that's why we say it's Jack who caused the payment. Therefore, it must be included in his gross income, in Jack's gross income.
Okay. Okay. I see.
Yeah.
Thank you so much.
The amount was paid to Jack, but the services was rendered by Jack. The amount was paid to John, the father, but Jack, it was the person who rendered the service. So that's why we are saying it's included in Jack's income, gross income. Anyway, I can elaborate.
There is a very thin line between. See, Jill receives the service from John. No.
Let's do it again.
So John he received the payment from Jill, but the services were rendered by Jack. So the who's the beneficiary or Jack? Okay, it will be reflected on Jack's gross income. Okay, irrespective who received the payment. Okay.
Yes. Yes.
All right. Irrespective who
Okay.
received the payment. Okay. Okay.
Yeah, I think
Yes.
Jack is the one that sent John to probably do the work, but
Yes.
the owner of the work is Jack.
The contract is Jack.
The contract is Jack.
The contract is between Jill and Jack, but
Yeah.
Jack sent John to do the work.
Okay. Thank you.
Yeah.
There was Marion. Marion, are you assisted? You can speak.
Yes, no, I think I was coming to the same conclusion as my my colleagues were coming to, that it's similar to you if you hire a plumbing service, but they send the person, you wouldn't pay the plumber, you would pay the company. So that is the conclusion I was just drawing there as well.
Yes, yes. A good example. That is a good example.
Thank you. I just needed to check, from the list of all the special inclusions, there was is it no, it's not alimony. Can you show this?
Sorry?
Remember which one it was? I think it's second to last on the list that you were showing us from your slides.
Let me go back to the list.
Keyman policies.
Yeah, I said for Keyman policies, I said you don't need to know, for this purpose, you don't need to know it. It's only section N that is applicable. So,
Oh, all right. Okay.
to this, yeah. I said it's only section N, which is
Okay, no problem.
Yeah.
Thank you.
I see here in the ad that it makes reference specifically to spouses, and I'm just thinking, hypothetically, of course, based on some of the family arrangements we have now, where there is a maintenance order specifically, for whatever reason, maybe I mean, there may be other orders that are in place. As long as that order would be in place and maybe come from a court, is that also a maintenance order that would be considered valid for these purposes?
Can you repeat that again?
So I'm saying I see here that it actually makes reference specifically to spouses. I'm assuming that it's not necessarily only spouses from a marital, a general marital kind of perspective, and any maintenance order that would have come from a maintenance court would be valid in this case, even if the
Yes.
parties were unmarried. Okay.
Yes, yes.
Okay, thank you.
So we have the special inclusion in terms of Section 1 of the income tax, which are annuities, alimony, services rendered, restraining of trade, loss of office, fund benefit, service commutation and amounts due, list premium, know-how payment, list improvement, fringe benefits, dividends, human policies, but in terms of paragraph M, N, we just need to know N. So these are all the list of special inclusion in terms of income tax, in terms of Section 1 of the income tax. The first one, we have the annuities and periodic payment, where the person receives the regular or periodic payment. Periodic payment include monthly. Under periodic payment, we have a monthly from a type of pension, provident, preservation fund, or retirement and annuity fund. This payment will be included in the gross income. Amount must be distinguished from the retirement lump sum. So non-resident, as we said, non-resident, this will be taxed on pension paid to them from South Africa, as well as the deemed to be from South Africa. Certain pension, where there is a non-resident receiving pension from South Africa, he will be taxed on that. And we have the cases where it's necessary to apportion between the person who is employed in South Africa and he was employed outside, where the person is employed in South Africa and also employed outside, we will apportion the amount that is due to South Africa. So any type of annuity is also included in any type of annuity will also be specially included in the paragraph A. And it's also important to be aware that annuity does not only originate from retirement. For example, you can buy annuity. I said you can go to Old Mutual and buy annuity. And the receipt that is regarded being capital in nature is normally subject to taxation. For example, the inheritance will be specially included in the gross income. You can go to this case and read more. And a taxpayer can also invest the amount which is with the insurance company. As said, you go to Old Mutual, you buy annuity. That's, we call it purchased annuity. And again, you have partially the annuities received by taxpayer are composed of two elements. Two elements of annuity is partial repayment and investment return. And amount is then deducted from total return received during the year of assessment. Remember the year of assessment in order to determine the taxable purchase of annuity. And in terms of paragraph A of the Income Tax Act, it says any amount received or accrued by the way of annuity, including the living annuity, the definition of section of annuity amount. This is the definition of annuity in terms of Section 1 and Section 10 Cap A. It will be annual payment repetitive. What is excluded is the installment, a discretion payment, and terminable amount. So we have also the example where the person is receiving the installment. We said installment does not form part of annuity, so it will not be included. And the second example we have where they pay they sell the business and proceed from there, they receive 100,000 for the rest of their life under consideration. So the amount qualified as annuity, it will be included in the gross income. We have alimony. Alimony is between the spouse where they divorce. We said that amount is included in the receiving. We have the receiving spouse and the paying spouse. So the receiving spouse will include the amount in the gross income, and the paying spouse will receive no deduction. So again, we have the services rendered. We have where the services rendered, the person is employed, but that person, we also have that amount will also be included in the gross income. We have scenario where the person render a service on behalf of other one. The person with the contract, which is Jill, the contract is between Jill and Jack. So John, the father, went to do the service. The amount that will be included, it will be 1,000 in Jack because the service was caused by the payment by Jack. The service was caused by Jack. Jack is the one who have a contract with Jill, but it was rendered on behalf of John, so it will be included in Jack's gross income. So we also introduced the restraint of trade. So restraint of trade, the person who receives the amount from restraint of trade will be included in terms of paragraph CA and CB, HEP A and B. And we also have amount where the taxpayer receives the amount from termination of employment. The amount is included in the gross income. The lump sum from employee, which was caused by loss of service, or the person is older than 55, or incapacity, or the person is retrenched, and this amount will also be included in the gross income. And also, we also have the lump sum from the employee, from the employers, they are also included, and taxable portion of the retirement is included in the gross income. We'll do that in Learning 2, Learning 12, and commutation amount due, amount received or accrued in substitution of amount due under the contract of employment to also be included in the gross income. We have the lease premium. So the lease premium will also be included in the gross income. So the know-how also, the amount received from other person in respect of scientific knowledge, those technical knowledge, scientific, will also be included in the gross income. We also have the leasehold improvement. Here we talked about the agreement. There must be an agreement between the lessor and the lessee, and the lessee will do the improvement. We have 3 scenarios. I said we have the first one where the amount stipulated in the contract was spent more than specified in the contract, will include the stipulated amount in the gross income. We have the lease agreement where they require specific type of building, will include the reasonable value on the amount. The reasonable value will be included in the gross income. And the third one, we have where there is no contract, the lessee voluntarily do the improvement, it will not be included in the gross income. These values will be included in the year where the improvements are completed. You must also check the year where the improvements are completed and year of assessment. So for these purposes, you must check the year and match with the improvement date. So we also have fringe benefit where the proceeds from part of income of the proceeds are included in the taxable income, where the disposal of fixed assets of capital nature may form part of taxable income will be included. We have the scenario where these assets, where assets are similar to trading stock, are used for the purpose of manufacture, are used in production of income or sale of exchange, the proceeds will also be included. We have dividends. Remember, we also have section, we'll talk about the dividends on the next lecture. We also have income that in terms of paragraph A, the dividends, interest, and other income will be included, but there's exemption. We'll talk about the exemption later. And we have other income that are included in terms of paragraph N, is paragraph L, M, N, but for your purposes, we need to know paragraph N. We also have paragraph N in terms of the provision that require taxable income to be included. It will be included, which is recruitment, asset income from estate and gain from foreign exchange will be included in the income, in the taxable income. We also have rental. We also have where the couple are married in commuter property, the passive income and the rental income will be deemed to be received equally by both spouses, 50-50 on this one. And we have dividends income, interest income, and the exemption we'll talk about them later. So any question before we close? Thank you for your time.